Good day, everybody. Welcome to another episode of the Medtech Business Academy. My name is Skender Daerti. I am proud to welcome you to another episode of our vaunted podcast series. I am glad to be joined today by my colleagues, Tom Hickey, Barbara Strain, and Scott Alexander. Thank you, everybody. Welcome, guys. Good to see you.
Yeah, glad to be here.
Good to be here.
So as we record this, we are sitting in the middle to late parts of July. And part of what we've been talking a lot about lately is just the activity and the recent turn up in activity that feels like is happening in the overall healthcare segment as a whole. And in kind of getting their finger on the pulse, unfortunately, each of us are pretty well networked. We talk to a number of different people across the industry, provider, medtech, pharmatech, all different sides of the industry. So when we're sharing this information from you, it doesn't just come from our thoughts, although you never know which voice I'm going to talk to next. But with that, we do talk to a number of people. And so when we get an opportunity to talk in pre-production and talk about what we're going to talk about, we kind of amalgamate all the various conversations that we're hearing, having, listening to, et cetera. And one of the things that we're starting to see is, over the course of the first 6 months of this year, clearly politics and a changeover in administration has a massive effect on our industry when you consider the fact that I think, Medicare accounts for still 60+% of all payer dynamics. So anything having to do with Washington has a direct effect on healthcare. And as you go through that, what we kind of were sensing for the first 6 months of the year is that, at least for the first 4+, was that everybody was kind of in a deer in headlights type of mode. What's going to happen? I don't know if I want to act. I don't know if I want to make an investment. I don't know if I want to do this. I don't know if I want to downsize. What should I be doing? You know what? I'm just going to stand still. And it feels like pretty much since around May, activity's been trickling up a little bit. And as we're looking at various headlines on from earnings reports through Q2, it seems like there's a little bit more of a sense of bullishness out there. And people willing to start to open up the spigots, because I think there's a general sense that we could have some investment coming back into the mold. So let's dive into that a little bit deeper. I mean, Tom, are you hearing that? And what sense are you getting?
Yeah, I'm hearing some of that. And some of my take on that is when you get a change of administration, I think there's a normal tapping of the brakes from everybody in the business community thinking, well, okay, let's see what this administration can deliver. And not only did we have, change of administration, but the dynamics in Congress changed as well, right? So the ability to get, bills passed, and will they get passed? Can a slim majority in the House of Representatives actually do something? And what we've seen is the administration seems to be pro-business for the most part. There's some touch points in there that we can talk about and have talked about. But then you see the House of Representatives and the Senate pass bills on narrow margins, but the bills passed. So that all starts to provide some clarity. And I think that's often what individuals in business need is we've got better guidance on tax policies for the foreseeable future. We know how depreciation is going to be handled, at least some clarity there. And I think that now gives folks enough information that bigger macroeconomic decisions or bigger investment decisions for businesses can be made with a little more confidence than earlier in the year when we're still trying to sort this all out.
Yeah. And I just want to add, for the most part, I believe our podcast to be apolitical. So this is not in any intention or in any which way meant to advocate or whatever the opposite of advocate is, disassociate with any sort of policy. It is more, I think, and Tom, what I'm hearing you say is just clarity. Clarity on intention and policy and furthering, right?
Right.
Would that be correct?
Yeah, because there's always debate, right, about, okay, the new administration, no matter who they are, whatever the party affiliation, can they deliver on their promises? Can we get bills through the House of Representatives and the Senate, no matter what the makeup is? In this instance, there was thin majorities, but those bills got passed, right, which offered clarity to the business community to go, okay, if I make an investment in capital equipment, or if I make an investment in expanded production capabilities or innovation, I know how to treat that now because the roadmap has been clarified.
Yep. And Barbara, how about your perspective?
Well, from the other side of the table, providers are still having issues with their dollars. And so businesses may be affected in a very positive way, and they might be then getting big bumps from certain sectors, like maybe the government. We were talking about that before. But others still are encumbered with, I can't let the money go. And because the opposite side is they're not going to see Medicaid money going in the future. It's spaced out in, over years. And then Medicare is still a little up in the air. And there's a variety of things going on. So reimbursement, which is how they make margin, may not be available for some of these pieces of equipment and things. So there's sort of three conditions. One is there are upside going on with some of the bigger health systems. It depends on how they positioned themselves the first 6 months, maybe even the last 6 months of last year, et cetera. There are still mergers happening because of all of those various factors, and they think they can work through that to their advantage, and then maybe monies might, go, especially in innovation. The third category is there's a lot of, I'm going to call them decouplings of mergers also going on because they realize it's not going to take them to where they need to go, and that by uncoupling, maybe they can survive. So you got to look at all of those depending on whether you're on the provider or the supplier side.
Scott, what's your reaction to what you just said?
Yeah, well, first of all, you mentioned we were apolitical. I disagree. I am very firmly in the Steve Forbes for president camp and continue to do so. Him and Ralph Nader should go for run for Congress.
Where's Ross? Are you giving up on Ross Perot altogether?
I feel like Ross is maybe a little bit beyond. I think he's dead. So
okay.
All right.
They can do amazing things. I mean, go to Vegas. They do some pretty amazing things with, holograms.
That's a good point. We got him and Michael Jackson as the VP. I mean, I think there are lots of options that we've got. But all the, my political affiliations aside, I think we're seeing a lot of engagement and growth in the market. And kind of the point that, Tom, you and Skender had described, like, we're seeing a lot of earnings beats, topping earnings, both on the med device side, Abbott, Thermo Fisher Scientific. There's a couple other ones that were out there. Just came through. Edwards is another one that came through. J&J. Oh, that's right. J&J they beat earnings and actually improved their guidance.
Yeah,
so like
substantially.
Yeah. Good time to be owning some J&J stock. And, I think that's one piece. But then, if you look at the for-profit health systems, HCA and Tenet, I believe, both just beat earnings and may have raised guidance as well. So I think that, and then when you get down to, smaller SMB world that we deal with high growth, venture-backed companies and that sort of thing, like there is definitely a lot more excitement than there was 3 months ago. I think everybody's starting to see the logjam is clearing up. And I think this is kind of the point that's been made. This is a natural piece. This is what happens when you get in and there's some concern. And I think everybody expected, again, all jokes aside, like we're apolitical. We're just looking at the business of healthcare right now. I think everybody came in bullish that Trump was going to be very pro-business, and then first 100 days in office or whatever, he like really scared a lot of people with the tariffs and everything else he's doing. Right. So that had a tremendous chilling effect. And I think what we're seeing is, okay, maybe it's not as draconian as we expected it would be. And so things are moving back towards a bit of normalcy, and with this pent up demand as well. So I think we're going to have I'm looking forward to having a really strong second half of 2025.
Yeah, I think that concept of pent up demand is really the biggest driver. You know,
Mhm.
when you go 4+ months, and really it's longer because the election happened in November. Then there's all the hubbub of who and what's going to
Mhm.
happen. So it really feels like pre-election, probably almost a year at this point, and we're recording this in July 2025. We said really it was around that July timeframe that I feel like people are like, I don't know who's going to win. I don't know
Mhm.
what's going to happen. And so it feels like so much of people were pumping the brakes at
Yeah.
that time frame. So we've got a year almost of pent up demand.
Yes. Yeah. The other thing too, because we've got clients that are on the patient side, like surgical practices where we're helping to connect them with patients. And one of the dynamics that we've seen over the past several years is, you know how we used to see November and December were busy times because people had paid up their deductibles and that sort of thing. Well, what we're seeing more and more is people have higher deductible plans and they're not meeting their deductibles. And so the traditional November, December cases are now becoming January, February cases.
Oh,
Interesting fact, right? And so
yeah.
then what happens is, everybody, you talk about the pent up demand. Well, like that demand got pent up and then everybody got scared about what's going to happen. And all those things are pushing into later in the year. So yeah, it's an interesting dynamic that I think is different than what we've traditionally seen in our industry.
Yeah, we definitely noticed that last
Mhm.
year and the year prior. So that's illuminating. Yeah. Uh,
So let me ask a question with that, because I'm thinking if there is this pent up demand and we're going to have this, let's say, sprint to the end of the second year, what does that do, right, to you're a medium sized business, right? And you've been kind of percolating along. We're also hearing things like supply chains are stretched, right? So are we looking at the potential of some back orders? Are we looking at some potential where, we've got to scale businesses quickly, which can also be dangerous?
I mean, I've heard, speaking with a few manufacturers, I've heard that they're sitting on inventory
Mhm.
right now. They've used that time because again, they weren't expecting to be so static for this long. So there
Mm-hmm.
was a buildup of inventory. So as I'm hearing it from customers, we have inventory. We're waiting for the orders. And if there is a growth, could we still end up in a back order situation in December? Yeah, but theoretically, they should be positioned for
Mm-hmm.
decent volume increases, at least in Q3. Would you agree, Barbara?
Yeah, the issue is it's the actual selling and when you're going to receive funds for those. Because you can go into someone August 1st and you may make a deal, and an adoption of a piece of equipment or supply conversion or something, but it doesn't have uptick until maybe October, November, or even later, where you're actually getting money from that. So you also have to look at that. How quickly can some of those transactions happen?
Scott, what do you think?
Uh, yeah, I mean, I think at the end of the day, we're gonna probably end up. Our back order is gonna be an issue, probably. I think we're gonna look at that. I think that there's definitely going to be kind of a. I do think there's going to be a sprint to the end of the year. I think we're going to see a lot of pent up demand on the capital side. Because again, right, those dollars were not being spent in the first half of the year. So, if I'm running a company and I have a capital product, I'm leaning in hard to that. I'm also thinking about how I can catch up on some of the surgical cases that we expect we're going to see continue to be high. And I don't know that it requires anything different. It just requires the right block. Everybody knows what to do, right? In terms of you have an opportunity, how do you get in front of it? And to me, like that's the name of the game. If I'm that chief commercial officer or CEO of a mid-sized medical device company, is to think about, all right, I know what the playbook is. We know the volume is going to be out there. It's more likely that dollars will be spent. How do I make sure that we're the ones winning them? So that to me is kind of the name of the game right now.
Yeah, your point is well taken because it's all the things we've said on this podcast over the time.
Mm-hmm.
We're coming
Yeah.
up on 100 here at some point. I
Yeah.
was informed of a few days ago. But it's going back to those playbook things. And how do you make sure that you're looking at the right region, market, et cetera, that then does have money available versus I'm just going to go back to what I was doing and maybe you don't land something.
Yep.
Yeah. I mean, if you're and this is going to sound absolutely horrible, and I mean this as apolitically and as honestly as possible and sincerely, unfortunately, it's going to come up. If you're a company selling into rural health right now, that's going to be a challenge.
Mm-hmm.
Yeah.
And they may still take your units. Your collectibles are going to be hard to come by.
Yeah, and if you're a small company, that can be very, very painful, right? I work with a lot of innovators and a lot of early stage companies, right? So, I'm watching for a couple of other metrics, and I haven't had a sense yet that like investment capital has become widely available. It was tight. I kind of have a feeling that it's become better, but we've not seen a lot of maybe the floodgates open into that arena. So a lot of the smaller innovators that I'm working with are still watching cash flows pretty tightly. They're seeing some growth in sales. However, they're having to still be very careful and really talk still a lot about value and delivering value and trying to get those messages across, in this environment that we're dealing with as well.
We're hearing a mixed bag on the investment front. Some folks are finding that there's dollars that are getting allocated. Others, like talked to a company that I've known for years earlier this week, and they had a deal they thought, a venture round they thought was going to go through that ended up falling through. Now, it could be other reasons, but felt a little bit sort of economically driven on that stuff. And so I agree with you, Tom. I don't think we've seen the floodgates opened up. I think it's more sort of like spits and spatters and that sort of thing. And, ultimately investors are looking, they're going to be slower into it than obviously the entrepreneurs would want. So they're going to want to see these kinds of things like we're seeing right now and expect to open up the purse strings as opposed to being on the front end of that kind of stuff.
Yeah, that's often a lagging indicator. So it'd be interesting to see if we see that happen, fourth quarter of this year or first quarter of next.
Yep, exactly.
Yeah, I'm seeing the same thing with some of my clients. It's more difficult to get that capital and to raise funds.
Well, I think, we're still in an uncertain interest rate environment, and it probably will remain uncertain until there's more clarity on tariffs. That seems to be the primary driver of what's influencing the Fed right now. The latest round of inflation numbers seem to be moderate, but at the same token, we still don't know. And I think that's still going to put a little bit of a damper on some of that. But the reality is, just like we were talking about pent up demand here, there is pent up funds that are going to need to be allocated. If you're a portfolio manager at a venture capital firm or private equity, you can sell your investors on great 7% no risk returns in the money markets only for so long. Because at some point, those people are like, I can get that return on myself without paying you the 3% on that. So that's not what I'm paying you for. I'm paying you to get me 25 plus, put that money to work. And so I think at some point we're going to see a flood open up of that too. So really the opportunity for 2026 as we roll into 2026 with more certainty could be a very bullish and robust year.
Yeah.
So with that, what are the things and kind of getting to the apex of this as we're rounding into home plate here, what are some of the things, what are top 3 things people should be doing at this moment as we approach August to tap into this bullishness if they haven't already?
Barbara? Yeah. You want to kick us off, Barbara?
No, I'm just going, well, I thought we just said a few of those things, but let me see let the other guys talk. I'll conjure here and see what they say.
I can start it off. Number one is, these are great times to, number one, look and make sure, your balance sheet is as strong as you can make it, right? So you're buttoned up for when inevitably we have a downturn, right? But also, to my earlier point, I think making sure your internal supply chains are solid, right? To make sure you've got those supplies, you can handle that growth, and then look at, where do we go from here? If you're a mid-sized company, there's certain things that are coming along in terms of how you can depreciate, what you can do for investment, especially for additional capacity here in the U.S. So really look at those types of things, as well as I would add one other aspect to this. Look at a lot of strategic partnerships, both with the healthcare delivery system, but also some of those smaller to mid-sized companies who are looking for this type of investment. Looking at some of those strategic partnerships and looking at technology extensions and investing in that to help broaden what you're doing and put yourself in a stronger competitive position. This seems like a really good time to do that, especially if you've got a solid balance sheet.
Scott?
Yeah, I think to me, this just like eat your veggies and floss your teeth kind of stuff. It's like, and this is going to sound really simple. I don't know that it changes necessarily based on the macroeconomic conditions as much as it's just I've just seen so many companies that are just not doing the basics and they're suffering. And it's just, I don't know, maybe I'm getting old and cranky, but like in the past week, I've had more conversations about the fact that there are good sized, good, well organized companies that have no clue about their sales data. Like their CRM is just a dumpster fire. They're not consistently building demand, right? They're just trying to like find people that happen in the market today, but they're not doing the things that they need to do to kind of build up their brand awareness. And then they're not managing the commercial efforts through a KPI driven approach. And so, do I do something different? I think I look at the data and I think there's going to be higher than anticipated growth in the second half of 2025. Like that's, again, based on what I see with the companies that we work with, I see the macro environment, like we know the president is very much focused on how do we grow this business to the point where he's taking shots at the Fed. Like he clearly wants growth. And so I would lean into that, but I would make sure that wasn't sloppy growth, because if it doesn't happen as quickly as we can, you don't want to have just like thrown a truckload of money into a poorly running system. So I feel like now's the time to like you should have your systems in place. You should be able to look at the data and see, hey, what's going on inside our system. So eat your veggies, get your CRM and your data lined up. Focus on actually building brand. We kind of see people have moved away from that, and then measure the sales and the commercial process through KPIs. I think you do those three things. And if the market goes like I anticipate it will, you'll be just swimming. You'll be thanking us from your newly bought boat. If not, you still have the discipline and the capabilities to really be intelligent about how you're driving growth, or at least sort of maintaining the status quo. So to me, that's what I would end up doing.
So we've been talking all along this year about being flexible, watching where things are going, really communicating and building those sort of relationships with providers so that when something happened, you're poised to do something. We're still talking sort of like out of two sides of our mouth. We're trying to encourage and say that the suppliers on their side, the tech and things, are going to just boom and stuff. But the providers have to come along with that and have those monies and things to provide. So it's still a balance. And if they haven't prepared for this moment before, and you're just trying to gear up, you may not make many inroads by the end of this calendar year. But you got to look at the juxtaposition of the budget years for the providers don't necessarily, almost never in a lot of cases, line up with those suppliers. So you've got to really look at that. Yeah. So it's a lot of looking at data, getting those alignments, focusing on where those key alignments are, and then keep working through your other alignments that you get together. You just can't go out broadly to everyone because they're all in different places financially.
I think you're right. I do think the fact that HCA raised their guidance suggests that, hey, we've got like there are at least pockets where we're going to see growth. Yeah, I think to the point that was made earlier, I don't know, Tom, if it was yours or Skender's, but like maybe rural health is not the place where you're expecting to see dramatic growth, but biggest health system in the country, I think, biggest for-profit
in the world.
In case you're wondering. Yep. Just raised their guidance and they're saying this is going to be a good year. So I think to your point, you're right, Barbara, like you got to be in the right spots, but there are people that are very bullish on the provider side as well about what the future is going to look like.
Yeah. Well, there is that difference between for-profit, not-for-profit, and there's a bigger percentage in one of those buckets than others.
Yeah, no, yeah, I agree.
Yep. And from we've been talking a lot about macro strategy. From a micro strategy view, I would say if you're going to guide some effort somewhere and you don't have any business in the VAs and the DoD, this could be a really good opportunity to tackle some of those government areas, just because there seems to be pent up government dollars. Anybody that knows anything about the government, the one thing they're really good at is spending money blindly. And they will be spending a lot over the next few months. And if you're a capital supplier, that should be where you should be going right now and finding out where those capital dollars are unlocked, because I think there's a lot of opportunity in the next few months coming with government opportunities.
Mm-hmm.
So, all right. Well, we've rounded third. We're coming home. Last bits. Leave us with some incredible parcels of wisdom, Barbara.
So I didn't get to comment on the rural. So that's where I'm going to kind of leave it, is that if we count them out, then we push them further and further into the hole that they're going to be in. So we have to be careful there and try to build up those somehow, some way. And maybe that's through some partnerships or relationship building or something. And don't just count them out as, I'm not going to get anything there, so I'm going to kind of ignore them, when they might be, we're predicting another 101 are going to close soon. So that can't happen, because it'll just flood our emergency departments, or we'll have a lot more untold morbidity and mortalities on our hands. And then they go back on a lot of those roles that aren't there. The Medicaid may not be there and other things. So I'm going to end it on sort of a sad note a little bit, but we still have to watch out for the rural.
Barbara, that's incredibly well said.
Mm-hmm.
Tom?
I'm going to leverage and take something that Barbara said. I like the juxtaposition, right? Because I always come at this, my bias, I've always been in sales. I've always been in strategic partnerships. And if you're at a company in a micro basis, right, your company's doing really well, there's a tendency to just, stomp on the gas pedal and go, right? But as you do that, you've always got to circle back, right? You don't want to leave your customer behind, and you really want to understand those customer pain points, because someday it always flips, it always pivots back and forth. And as you're adding those sales, and if your company is doing really, really well, make sure that you don't leave your current customers behind, and make sure you've buttoned up those relationships, because that's something that's going to serve you well in the future.
Well said.
Yeah.
Scott?
I think I was talking to my wife, who is smarter and more engaging than I am. So sorry, she's not on the show instead. But we were talking yesterday.
I mean, to be unfairly to your wife, that is a very low bar.
I mean, it's true.
She did choose you. So.
She did. She looked around. She's like, "This is the best I can do." So. Yeah, but we were talking yesterday and about how a lot of advice is stuff that you've heard before, like the value of all the books and that sort of thing. And we all make mistakes, and she luckily made this one. But we all kind of heard all the advice out there, and the value of advice now is just a reminder as opposed to learning new things. And so I think a lot of this comes back to, it's a reminder to do the right things, follow the processes, right? Operate in the way that everybody knows they need to do. I wanted to say one thing on Barbara, your comment about rural health, and not to go too long, but so we had a client that we were helping to commercialize as an Israeli cardiology company. And when they came to the US, their goal was like, let's go after Cleveland Clinic, let's go after Mayo, let's get into like these big academic, premier medical institutions. And we managed to convince them to be more democratic in how they market it, right? So let's use some digital technology. Let's go out to all the cardiologists and primary care docs and PCPs that we can identify in the US. And what we found was, yes, we eventually got them into Mayo. Yes, we got them into Cleveland Clinic. But the folks that were the fastest to buy, and they were just buying these things like, single one call close type things, were rural doctors, rural health. So this was a remote EKG for monitoring heart conditions at a distance, happened to be May of 2020. And it was like West Des Moines, Iowa cardiology was buying like 10 of these units just like immediately, because they have literally farmers in the corn sweat who are trying to, they got to take care of them. For those of you who don't know what corn sweat is, quick Google will inform you. But they were buying them like almost sight unseen of like, I need to have a way to solve for this problem. And rural health was what drove this company's growth for the first 6 months. And it was like the hockey stick that everybody wants. And so I say that to say, to your point, Barbara, like it's not about writing these areas off. It's about being smart about getting your word out to them and engaging with them in a way that is economically supportive for your business and respectful and engaged with them as a group so that you're able to get the technologies out there that can help the folks that live in rural America, and you're able to do it in a way that helps the business model continue. So anyway, don't give up on, and I'm from a small town too. So like, I'm a fan.
Mm-hmm. Doing your homework.
That's right.
Yeah. Great job. So, failing to plan is planning to fail. Have a strategy, have an idea of what you're going to do, execute on something. Randomness, you may hit the bullseye, you may not, but at least if you keep aiming at that bullseye, at some point you will. But if you do so randomly, you never know when. So I think that's the big thing. I think there is an air of bullishness right now, just from a business perspective of healthcare, at least in the immediate term for the second half of 2025, based on pent up demand. I don't know what implication that'll have on 2026, if any, but the whole goal is, what can you do now to close out the year on a strong note? And if you get in touch and understand your customers, understand their markets, understand their needs, it's really just simple blocking and tackling. That's all it is. So thank you to each of our panelists for all your contribution. Thank you to our audience. We do want to promote, we will be hosting through our sister series, the Value Analysis Expert Series, and starring Barbara and her cohort. We will be having a webinar Friday, August 15th at 11 a.m. It's called From Forest to the Tree, Setting the Roots for a Successful Value Analysis Strategy. We're very excited. Barbara will be the star of this. And we encourage everybody to come on. When you talk about developing a plan, well, as we all know, value analysis is kind of important to that execution plan. So why wouldn't you come on and listen to the experts tell you what's important to them, so you can get through the system with more rapidity, effectiveness, and overall making it better, win-win for all parties. So that's August 15th, again, at 11 a.m. If you need more information, we'll post it with this podcast. So please go through, come and register. We're excited. Thank you, everybody. Have a great day.